And welcome. It's Mary Ellen McGonagle here with your Friday MEM Edge show, the show where we bring you where the action is in the broader markets. So let's not waste a minute sharing with you what we are going to review today. As usual, we will go ahead and take a look at the broader markets, get a sense of how we ended the week. It's been a very interesting week, I would say. Very significant gains in each of the broader market indices. So we'll want to see where we stand, of course. And then also base breakouts amid news. And this was very encouraging to me to see just how many stocks are breaking out of sound bases. And we will review many of them. Also, inflation is real. We did get quite a bit in the way of data and best defense. This is going to be a carry on from last week's show. And for anyone that missed it, I urge you to take a look at it. Last Friday, I did talk about the defense in that show as well, but this is going to be newer areas that are known to be a good defense when inflation is on the rise. Also, pockets of strength in a difficult market environment. And I think most of you would agree that we've been in a fairly tricky period here as the markets really try and come to terms with a lot of cross currents, a lot of news, and really, in the end, an unprecedented period for many of us. So here are some of the more the news that was more reacted upon. And first up, the Senate did raise their debt ceiling. That came through. That was a little bit of a minor concern, but a lot of the other data had to do with inflation. So we did see job openings rise. We are currently in a period with the biggest worker shortage in decades. And of course, this is going to increase wage pressures, which in turn is going to be inflationary. And we did see the technology sector top performer this week. We'll go ahead and dig in. Where was the strength among this index or this sector that gained 6% on the week? Volatility, good news, the VIX did drop below that 20 level, and that is putting us certainly in a safer territory, if you will, certainly compared to last Friday's spike up into that 40 plus range. Inflation rate that was announced today, we are at a 40-year high, 6.8%. And for many of you that follow this metric closely, you'll know that the Federal Reserve for quite some time had that 2% inflation rate as their really goal, but obviously we are well ahead of that. So that's really driving quite a bit of the action as far as price movement to the upside, and we will get into that. Next week, we are going to hear a bit more as it relates to inflation. We're going to get that producer price index, retail sales. I know that's going to have a lot of eyeballs because we are in the throes of the holiday season. Powell will be presenting a press conference midweek, and then we will get housing data next week. And the emphasis on this will make sense as we move forward. So from here, let's go ahead, take a look at the S&P 500. We did close the week up 3.7%, so generally quite constructive. We were able to get back above these shorter term 10 and 21 day simple moving average. I will say the volume was not as compelling as one would like, but we are seeing the outside momentum indicators in positive territory. So generally looking quite good. We need to take a look, of course, here at the NASDAQ. This is the high growth area, not up quite as much as the S&P, 3.4% gain. We can see that it's just here finding upside resistance at that 21-day moving average. However, outside momentum indicators did end up here in positive territory. Not as strong as I would like to see, so still a little bit in the way of being on shaky ground as it relates to the NASDAQ, but we will go ahead and focus on some of the pockets of internal strength there so that you can either formulate your watch list or potentially begin to build positions. From here, let's go ahead and take a look at the underlying sectors within the S&P 500. We want to be able to focus on where that relative outperformance and strength has been. So this is a 2-month daily price chart view of those 11 sectors. And I've gone ahead and added this RSI indicator, descending order. I'm going to go ahead and update that. And this is a theme that we did in fact experience last week. Let's take a look at these relative outperformers. Consumer staples on the rise. And we can just take a quick peek at this chart, hit a new high today, all about those higher yielding staple stocks as a defense against really super high inflation. And this is what I did talk about in last week's show. Utilities up here at the forefront, healthcare, another defensive area, but we are seeing some of the bigger uh, mega cap pharmas generally trending higher, and then bottom fishing in some of those medical equipment stocks. Real estate up here, this is another high yield, really superior inflation fighter up here at the forefront. And then as we drill down, of course, you want to be aware of these generally weaker areas. And we can see discretionary down here, a lot of that due to Amazon and Tesla underperforming, and also financials. They kind of bounced around a bit here, so not a lot going on there. So from here, let's drill down even further. I have several metrics, ETFs that I use. My focus is on uncovering high growth, faster moving stocks just as they're poised to take off. So a lot of the ETFs that I use are going to be software, semiconductor, but also not ignoring the price of oil as well as banking and interest rates. These areas have been the top performers year to date: energy, technology, and financials. So important to keep your eye on what is occurring in those stronger areas. So again, a 2-month daily price chart view, that RSI. I'm going to go ahead and update it and take a look up here in the forefront. Now, it was not an outperformer this week. Semiconductors did gain, but not quite as much as the indexes, but they're holding up really remarkably well. We just took a look at the NASDAQ and the S&P 500. This tells an entirely different story. So really remaining firmed up and looking quite compelling. From here, we can take a look. The Dow Jones Industrial Average did break back above that 50-day. It had gone down to the point of breaking below the 200-day, which can be really quite ominous, but a very healthy, nice recovery out of there. And I will be sharing some of the names that are in that Dow index as well as in other indexes. So from here, let's take a look. I mentioned that volatility index, take a look at how swiftly we were able to drop. We're now closed at about 18.7, well below this spike, and it actually only got up to 36. I think I cited a higher number earlier, but still nice, really decline there in that volatility index. And then I talked about bank stocks, really just in a go nowhere environment, up about 2% for the week. Software still trying to recover, and biotechs just cannot find an upside break, if you will. Down again this week, just a very significant downtrend. This really speaks to the lack of investor confidence in the broader markets. A lot of these stocks, gee, out of about 550, I would say a lot less than 10% even have earnings. So investments in this area really are a sign of confidence, and we're just not seeing that quite yet in the semiconductor space. So from here, let's go ahead and take a look at some of those other areas that I mentioned that we would go ahead and cover. First up, let's take a look at some of these base breakouts this week. And I have to say, really, we had a surprisingly high number given the deterioration in the broader markets. Realistically, most stocks are still in recovery mode. We do still have a high percent of stocks below their 50-day, but of course, with my predisposition toward the markets, I am going to pay attention to where these base breakouts not only are occurring, but it's also a good sign for the broader markets that this is taking place. As we move forward, I'll explain further as we look at these individual stocks. So first up here is Bottom Line Technologies, EPAY, and it can be helpful with StockCharts.com to go ahead and ask for that full quote, because oftentimes you're not going to know every single, well, most of the time, every stock that's out there. So it will give you the industry group that it's a part of. EPAY is a financial software. Now, this particular significant gap up today, it's up 18%, is all about the company hiring an investment bank and potentially being a buyout candidate. So pretty significant move to the upside, big volume on that base breakout, bringing it to your attention because we can see this moving average convergence, divergence, MACD just now having that black line crossover up above the red, indicating that the downside pressure here could be in fact reversing. So from here, we can go ahead and take a look at a couple of other stocks that are breaking out of bases and looking really quite compelling. And next up is Oracle. These guys, another software name. And to be fair, there are over 450 420 software stocks, but this is encouraging because software stocks by and large have been under pretty significant deterioration. This is Oracle going into today's earnings report, very indicative of what we're seeing in many other software stocks. Some are down even quite a bit more, but let's focus on today's base breakout. I'll mark this up so that I can share with you that concept, because this really can be one of the more powerful patterns, and most notably when it occurs on news. And this week, a lot of them are on earnings. So I find this really quite encouraging that strong earnings are driving these stocks higher. So with Oracle, they also did announce a share buyback program, which investors are very responsive to. We can see on this MACD, we did get that black line up through the red, but again, of note is the fact that it's occurring from a very low level. The significance here is we can go back to other periods when the stock turned positive using this momentum indicator, that it can lead to nice uptrends. So we'll keep an eye on Oracle here. Let's take a look at another name also out due to earnings. The ticker symbol is PLAB. This is a semiconductor equipment stock. Again, all about earnings. We can see this nice base breakout, big volume. The stock is pulling back a bit, and that is very much in line following a significant, I believe it was up almost 20%. But let's go ahead and take a look at the intraday chart. I'm not going to do this all the time, but it is quite helpful when examining these big gaps up to signal whether this significant uptrend is going to continue higher. And we can see that PLAB on this 1 hour price chart has broken below the 5 and 13 hour simple moving average. Certainly not the end of the world. Your outside momentum indicators still in positive territory. So I will want to see the price move back above the moving averages. It is up certainly above the 5 hour, but if it breaks back above this red 13 hour and we get a nice MACD crossover, we could easily see further near-term upside. But again, these gaps up on earnings are very much a thing when the markets are in a nice, strong, confirmed uptrend. So again, encouraged by experiencing and seeing this occurring during this current period. So here is another stock, Silicon Motion Technologies. This is another semiconductor stock. And what I did want to share with you, again, news related gap up, not so much on earnings, but let's see my drawing skills here. This has everything to do with the company announcing a share buyback program that is being viewed as very generous, very constructive, nice high volume characteristics here. And also they did reaffirm their already upped Q4 earnings estimates. Management did, so that's good news as well. Only thing here is we can see on the daily chart, the MACD is really at its height. So that would be my only concerning factor as to whether further near-term upside is in place. But again, longer term, this type of price gap up into a base breakout is very constructive. Another earnings related company, and it's not as dramatic, but it was a nice base breakout on a gap up. This is Build a Bear Workshop. And for those of you not familiar, it allows consumers and customers to go into their stores, choose a particular stuffed, whether it's an animal, a character, and then in the store fill it, and you can actually add voiceovers and so forth. They've really upped their game as to the, this was popular, certainly it's been popular for years, but they have really picked up their as far as their variety and a lot of the newer ways that you can do this. So going into the holiday season, we can see this gap up, huge volume that pushed the stock up into a nice uptrend, nice outside momentum indicators. I'm going to take a very brief break here, and when we get back, lots more to cover. Stay tuned. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my biweekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this biweekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. Going to share with you just a couple more of these base breakouts here on earnings. This is Ciena, C-I-E-N. And I want to go back to this full quote because it is certainly a very well-known technical company. It's telecom equipment, and it's a very vibrant area right now. Through this process, I will share a couple of other names here, but we can see huge gap up here. As mentioned, share buyback and earnings related. So let's go back to that intraday, and I think it can be helpful as far as highlighting that concept that I mentioned, because oftentimes when we see these big gaps up, there's a very natural thought process that you may have missed any given move. So here's that gap up on the open. We're still up here above these moving averages. Now clearly overbought, but still in a confirmed uptrend. And we can see the stock did gain an additional 2% today on that yesterday gap up. So from here, what I did want to share with you is another area. I'm not sure if I mentioned I was going to be reviewing this, but there has been a very vibrant area in the markets, and it is all about earnings and interest rates as well. And it is housing. So spotlight on builders, I'll call this segment, because it's really worth noting these companies, a number of them did come out with earnings. So HOV, this is Hovnanian Enterprises, they came out with their numbers December 9th, so that would be yesterday. So we can see this nice gap up, big volume in the throes of breaking out of a very lengthy base here. They came, this is a smaller name, it's about 800 million market cap, but nice 34% year over year growth, nice momentum indicators, but it is in line with what we are seeing. TOL, Toll Brothers, came out with their numbers last week as well. 95% year over year earnings, 22% above estimates. Now, this name has broken out of that base. I'm going to add a 5-day simple moving average and take a look. When we get these names, they really start to take off and experience a nice uptrend. That shorter term, this is the blue line, that 5-day simple moving average is going to be your area of support. A pullback to that area is going to be your buy point. But take a look at the big volume characteristics for the stock. It is certainly getting a bit stretched here, but worth noting. Let's take a look at a couple of other names in this space that are conceivably a little bit earlier in their potential move. This is Lennar, not particularly early, but they are due to report their numbers next Wednesday. Of course, another home builder. We're not quite in that overbought, or we're just entering that overbought position at this point in time. Let's see if I can share one other name, because really you could have gone down the list with these home builders. And the reason I'm pointing it out is because next week, one of the items to be reported, actually, there are at least two building related economic reports due to be released, which could impact ideally positively. So here's Meritage Homes, MTH, just now poised to break out of the space. They did report their earnings back here at the end of October, 85% year over year growth. So I did want to go ahead and share that with you. Again, all about earnings. These guys are really coming in with great numbers and revising their outlook going forward higher, which also helps. A couple of other names that also are moving on earnings. And of course, we are in a slow period now for actual earnings reports, but those that are coming through with good numbers, it's very encouraging to see. This is Academy Sports and Outdoors, ASO, and a real momentum player. And we can see that it pulled back sharply with the broader markets. They did come out with 61% in the way of year over year earnings, 56% above estimates. So, in response, the stock was able to break back above all of its moving averages. Well, in this case, it's the 5, 50, 10, and 21-day all in one fell swoop. Nice big volume characteristics. I would like to see that MACD crossover to confirm, but we are getting that RSI up there in positive territory. Another company that reported this week is Hormel Foods, and this is a real down and out stock. So a downtrend reversal potential, 19% year over year growth, big numbers for this company, and a 2.3% yield. So people hopping in, and this really takes us right into the next theme, if you will, the next area. Hopefully, I can get to all of this, because what I am experiencing and seeing in the markets is really a follow through to my last Friday show, where high yielding stocks are coming under accumulation. So I'm just going to check my list out here and make sure that I really spotlight, because I have a number of names, and I will review this in my MEM Edge report more over the weekend as I add stocks from this area. Certainly names that are stronger than Starbucks, but I did want to share this with you because we did have a gap up on volume this week that is setting the stock up for a potential base breakout. Nice outside momentum indicators here. And another name that was on my MEM Edge report, I will admit we got shaken out of it. We did get into UPS on this downtrend reversal. We're able to experience that nice gap up. However, as it began to falter, we did remove it. But this week, nice upside price action here. And this particular company also provides, it's a nice 1.9% yield. So we're poised to get upside momentum. I know that they are on the lookout. Actually, the company is anticipating a very strong holiday season. of course, numbers are already supporting that. Here's Colgate-Palmolive, CL. I mentioned consumer staples on the move, 2.3% yielder. And definitely when you see a stock like Colgate that is generally not going to be as dynamic as other areas, I'm just pulling up a longer chart just to give you a sense of really some of the volatility that can be experienced here. But the prior downtrend reversals, let's take a look, met with resistance at this 200-day, met with resistance the 21-day. So now we begin turning resistance at the 200-day. So this week, a pretty pronounced break above that 200. So these moving averages often will act as an upside barrier. And then, of course, in the consumer staples space, I think I mentioned 2.3 yielder. Yeah, so consumer staples, oftentimes you aren't going to see these moves, but definitely a number of names in there that are picking up. And so from here, I did want to share with you just a couple of high tech names that have yields. And all of this is quite encouraging. This is Cisco. They are breaking out of this nice base here, another telecom equipment company. I mentioned Ciena earlier, and then 2.5% yielder. So Juniper is also in that telecom equipment space, 2.4% yielder, gaining on the upside here. And one last name, because I have a couple more, but I'm going to save those. This is Broadcom, AVGO. Nice gap up. They came out with strong earnings today. They also hiked their dividend and announced a share buyback plan. So really trifecta with Broadcom. Big gap up to new highs, nice momentum indicators, big volume. So hopefully I'm sure you can capture a theme as I've moved forward here today. I did want to also share one last area. Natural gas, it did hit a 1-week high this week. There is anticipation of colder weather, so there are a couple of nice high yielders. There are certain screening platforms where you can do a name search for natural gas. So Baker Hughes, well-known oil, but also gas-related company. BKR is the ticker symbol. And it also has a nice yield. We can see it pulled back to this 200-day, is in the process of forming the right side of this base. Nice RSI, upside momentum, and the MACD just turning positive. So I do have other names in that nat gas space. So be on the lookout if you're inclined. I would urge you to screen in that area. Some very nice candidates. And those of you that have not looked at or trialed my MEM Edge report, I urge you to do so. We're in the throes of sector rotation. I'm going to cover it in detail in my Sunday report. I also have a mid-week report Wednesday and alert reports throughout the week. So please use that link below and you can go ahead and access immediately my prior reports and get up to the minute reports as they're released. Everyone have a great weekend. Look forward to seeing you next Friday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.